So cash is the new treasury bond. Okay. Cash, dollars, the new treasury bond. We're going to get into that. But first, let's check out the markets. Okay. And we got S&P still pulling back, right? This has been what, about 5 days since we had that big red candle. The S&P is pulling back. We're red on the day. We have support here at 446. If you're looking at SPY, you have the biggest support zone at 444. And it's looking like we do pull into that 444 area. So we will keep our eye on that. And I think just in general, right, taking a look at this area, this is the bounce, right? A lot of investors are offsides. They're still not in the markets. Not only is this helping the shorts and the bears because they may be having a relief rally, whether they got to stop out or whether they've been short at the top, but it's also helping some bulls who just haven't got in yet. So there is support down here, and I expect the rally to continue. Now, as we today what we're gonna do is gonna go over some of the news hitting the market, the whole triple A rating derated down to double A, and does that even matter? I don't even think it matters, right? We talked about it yesterday a bit, but S&P didn't react very negative. Okay, yeah, one red bar. It's not it's not over. We are bouncing today, so let's dive into some of the macro, okay? Or let's kind of get into what's actually going on here. So I'm going to put on a chart, or I'm going to put on some I'm going to put on our macro chart, and we're going to go over, make sure this is big enough so we can see it, right? This is S&P, and really we're just pulling into support. It's a nice correction. This is a nice, very well needed correction. It is breaking the trend. So that hyper uptrend, right? That momentum uptrend is broken now. The momentum uptrend is broken. So that's relief. That's relief for people who are not in the market. And that is relief for the bears. Healthy correction, healthy pullback. We got support at 444. The more that I see it, the more that I see the price action, I think we're coming into that level. Okay. Now, let's talk about the actual Moody's downgrade a little bit, right? Let's talk about that Moody's downgrade. Or I'm sorry, not the Moody's downgrade. It was the Fitch downgrade and why that doesn't matter. Let's talk about why that doesn't really matter. And while we take a look at that, I'm going to show TLT. Okay, this is the bond market right here. And it's going to be important for us to make sure that we digest this and understand this properly. Okay. It's just it's just financial market literacy, which hey, we're still learning. We're all learning here. There's new things in the market all the time. So first off, right, you only got one downgrade, and this is probably already, going through the market, but you only got one downgrade, which is Fitch. You have Moody's and you have S&P, who are rating agencies, and out of the three, there's probably more. You only have Fitch who downgraded, and this might be off old news. Okay, I think this is off old news, but old data, because they cited, okay, like we said yesterday, they cited, an imbalance in the politics, right? Using the debt ceiling as a political tool, so uncertainty there, and also the GDP to debt ratio, which is above 100%. So right now, our debt is larger than our GDP. Our interest payments on our debt for the U.S., for the federal U.S. Government, the interest payments are larger than our government, our defense spending. That's insane, right? Your interest payments are larger than your defense spending. You saw Oppenheimer. You might have saw Oppenheimer, where we spend a lot of money to build our defenses to save the world, or to keep from, the world collapsing on defense, weapons, whatever it is. But our interest payments on the debt are now larger than that. So that's really the main cause. Now, here's why it doesn't matter for markets. Okay, and I wrote some of this down because it is hard to wrap your head around. But Jim Bianco, this is kind of what he was talking about yesterday. If you're familiar with him, look him up, Jim Bianco. And a result of that is the bond market is selling off. So this is the bond market. I'm gonna actually throw it into a line chart so you can see it a little better. The pattern broke down. Okay, the bond market pattern broke down. So the buyers of U.S. Treasuries is breaking down, but this is on the long end, right? The short end is still okay. There's a curve there. So let's try to get through this. So now 2011 did result in a pullback, and from my understanding, the problem in 2011 was that the downgrade in debt from AAA to AA affected the markets because you needed AAA, what do you call it? AAA rated securities. I'm trying to remember. Hey, I'm still learning. AAA rated securities you needed to post as collateral or margin. You needed AAA rated securities. So when they downgraded it, you can no longer back your position with Treasury bonds because they were downgraded to AA, right? So that could no longer be margin or collateral. Now it doesn't matter. It doesn't matter your AA, AAA, as long as it's a US Treasury bond, it can be posted as collateral. It can be posted as margin. So the markets aren't reacting to that negatively, right? Number two, the biggest risk, really the real risk, and let me make sure, I'm sorry, I got a bigger board over here. I'm trying to make sure we get through all this. Okay. So the big risk is really the TGA refill, and this is what I want to go over. So let's check this out. We are noticing that the 10-year, so quickly, let's take a look at this. The 10-year Treasury is breaking out. Okay, the 10-year Treasury, and actually, let me change this chart. We're on YouTube. I'm going to flip this over to make it a little bigger so we can see. Actually, let's put it on this side. All right, so the 10-year Treasury is starting to break out, which is basically a result of less Treasury buying or a dump of Treasuries on the long end of the curve. Okay, so you have a Treasury curve. I'm going to try to draw it here. Right, you have a Treasury curve, and right now that curve, forget this right here. The curve is on the short end. You have U.S. Treasuries that are sold, and then it goes down like this. This is the curve right now. The curve kind of looks like this, right? Over here you have, let's just say this is 10-year, right? And over here you got the 1-year, right? So you're paying, let's say 5%, right? This is just as education, 5%, and down here, let's say you're paying 3%. So the curve is pointing lower. This actually isn't good. This is always a recessionary shape of a curve, right? If you want to look that up, we have some on the website. You can actually look up yield curve and how the yield curve works and what it usually historically signals. And the problem right now that we're seeing is the U.S. Treasury is actually, and this is 3% that you're going to collect on your interest. This is also how much people are paying for long-term debt. Okay, this is how much they're paying for long-term debt. So you're getting more over here on the short end than you are on the long end. All right, now historically, you look at the 2-year. So let's just say this is the 2-year because that's kind of what the benchmark is, a 2-year. So the U.S. Treasury is unloading supply of Treasuries, and when you unload those supply of Treasuries, you do have the yields going higher, which tightens financial conditions. Okay, so keep that in mind. That does tighten financial conditions. And the 10-year, you see, the 10-year is going higher. But if we go to the 2-year, just looking at the 2-year, the 2-year isn't moving. The 2-year Treasury isn't moving because there's buyers coming in to buy that. Where at the 10-year, it's moving higher because there are no buyers. And if we go to the TLT, we see it's breaking down. TLT is a reflection of longer term bonds. So 10 years and above, 10-year, 20-year, 30-year, TLT is falling. So there's no buyers coming in at that point. But that might not actually be a bad thing because you want the yield to actually shift, right? You want the yield to actually look like this. You want the yield to go up. This is a healthy yield curve going higher where you pay more at the long end, right? Versus the short end. So this might not actually be negative. And it looks like we are seeing yield curve control. Now, again, you're getting a supply. Okay, let me kind of erase this. I know this is a lot of education or stuff to think about, but I'm trying to make it clear, talk it out loud. It makes sense in my head, but to try to explain it is difficult. It is difficult, right? And it's so you see all these big words, it's really hard to understand what they're talking about. And I'm just trying to simplify it. If it doesn't make sense, then let me know. Right? Let me know if it doesn't make sense. So in general, right, we are seeing the 10-year go up, and that's not too bad because most of growth is determined by the short-term rates, right? You fund economic growth in the short term, right? This is the 2-year we're looking at. This is short-term rates, and this is how you grow GDP because people borrow for the next 2 years versus the 10-year isn't necessarily growth. So if it goes up, it tightens financial conditions. It's not bad if the 2-year is not going up, okay, and the 2-year is not moving, right? So it's not too negative. Now, another reason the 2-year is not moving is because there are buyers coming in to buy these 2-year Treasury yields. And the reason that's happening, okay, and we're going to throw this on here, is because of this reverse repo facility. This is the Fed's reverse repo facility. I just like to call it the checking account of the Fed or the savings account at the Fed. and we got up to $2 trillion in that reverse repo. This was about 2.5 trillion right here, $2.5 trillion of reverse repo liquidity. So this is basically cash that just went into the Fed. And the whole year I'm thinking, when is this cash going to come out and go back into the market? This is tightening right here. Okay, this is QT. This is quantitative tightening. You're pulling cash out of the banking sector, out of the capital market sector, and it's parked at the Fed. And that's why people are getting paid at the money markets, because as rates rise, rates are at what, 5.5%, right? I can't draw on this really good, but rates are at 5%. So all that cash is getting paid. That's why it's here. The cash is here because it's getting paid 5% at the Fed, right? But now what you're seeing is this 2-year Treasury over here. Okay, let's turn this red. The 2-year Treasury, let me get rid of this. Now you're seeing the 2-year Treasury is actually, let's see, is it working? There we go. The 2-year Treasury is actually paying more or about even as the reverse repo facility. So now at these 2 years, let's say they're paying 5, and this is just this changes all the time, obviously, because the bond market moves. But this 2-year Treasury is now saying, let's say it's paying 5.2%. Okay, so it's paying a little more. Plus you're getting 5.2% on a 2-year. Okay, on a 2-year note. Now, if you go lower, we don't have it on here, but if you go lower to 3 months or 6 months, they're paying more. So you're going to get paid 5.5%, 5.25%, or basically you're going to get a better deal in 3 months, in 6 months than waiting a year. So that's why the 2 years not going higher. This is why I'm not too worried about, all this, interest rates, liquidity, because the 2-year is, there's liquidity coming into the 2-year. You could call it yield curve control. So we are seeing that happen. Let me make sure I didn't miss anything. Now, the other part of that too, okay, is we have the Treasury general account. Okay, so right here, this chart, and I know this is a lot of information. This is the Treasury, or you can just call it the White House, the Treasury, whatever you want, the federal government spending account. Their account is going higher, right? Their account is starting to lift because all this cash at the reverse repo facility is coming down, and it's basically going into this account right here for the federal government. Okay, that cash is leaving, going into here. So Biden can keep spending, right? Biden can keep on spending because that cash is going in there. The US 2-year Treasury is paying, well, not the 2-year, but the short-term rates are actually paying enough percent where the Fed, or I'm sorry, the US Treasury is creating more supply of the short-term rates in order for the cash to leave and go into the US Treasury. I probably made that sound so complicated, messed it up. I just thought I'd try. I thought I'd try it out. Probably explain it again in the future. But this is what's going on here. Now, if the 10-year doesn't come down, we might be in trouble. The 10-year is going up, right? That's going to cause some havoc there. So the 10-year has nothing really to do. Oh, that's what's going on. The US Treasury here in yellow is also now supplying longer term rates. They have to supply longer term rates. And when they do offload those long-term rates, there's not as many buyers because it's not paying as much interest as the 2-year, right? The longer-term rates don't pay as much interest. So people are selling, or, the supply and demand dynamics cause the 10-year to go higher. And in that case, financial conditions tighten. We're seeing the 10-year go up, but the 2-year is not really moving. Okay, that reverse, this cash is not going to leave the Fed, the money market funds, to go get lower yield at a higher rate, right? They're not going to do it. You're getting 5% in 1 year. Why would you go get 4% over 10 years? It doesn't make any sense. So we're going to see that curve go higher. It looks like it's going to break out. Okay, but the positive is it will bring it should bring the yield curve back into balance. It should bring the yield curve back to where it should be. So it's really strategic by the Fed and by the US Treasury. It is really strategic. And what it means is the economy is going nowhere. We're going to have a strong economy. Maybe the second half of the year, Q4, Q1 of 2024, we might see some more volatility. But as long as the short-term rates here in the 2-year don't go higher, right? As long as they stick there, we're okay, because shorter term growth is actually more attractive, or borrowing is actually more attractive, even though it's pretty elevated. It is still pretty elevated. But if you can get that down, then the economy stays pretty tight. So for those companies that are borrowing like riskier assets, this is trouble. This spells risk for crypto. This spells risk for companies who haven't made an earning yet, like ARK Invest. all the innovation funds, this is risky for them because they don't really borrow money for the short term. They're more so going to be valued off of these longer term. This isn't long term; it's a short term. They're going to be more valued off of 10 years and above, right? Because you're looking way out into the future for growth. So if these go higher, then unfortunately, riskier assets are going to have more trouble because they look further out on the risk curve. So the economy in the short term is going to be fine, but the longer term assets, right, riskier assets are going to have a little bit of turbulence. Maybe this is a nothing burger. Maybe it doesn't matter at all. So in short, the money market fund cash, right, is more attractive than the U.S. Treasury bonds at 10 years. And that's why we see rates going higher on the long end, but not on the short end. The short end's pretty muted. I want to make sure I cover that. If that sounded too complicated, let me know. Okay. Now, the other part here, I think what's going on, let's go to the US dollar really quick. And I'm going to put this back onto the actual candles, right? US cash also, and I'm actually going to pull this up so we can see that US cash is becoming the new bond market. I think it looks like the US cash is becoming the new bond market. And what I mean by that, and this again, you got to pay attention to what I mean here, because if this is the case, then we might be seeing cash. There we go. We might be seeing grow like no risk, even though the Fed, it's kind of funny, even though the Fed is hiking rates, right? The Fed is hiking rates. And as an example, let me see if I can write on this so we can make this a little easier. So the Fed is hiking rates, that therefore interest payments are higher, right? We know interest payments are higher. So if you hold a lot of debt, it is confusing. It is confusing. I tried. I'll try to simplify it in the future, but I'm trying to wrap my head around explaining it. But anyways, this one's simple. Interest payments are higher, obviously, because the Fed has hiked rates, right? So if you own debt, if you borrow money, or if you have debt, you definitely are, it's going to tighten your pockets. But, right, if your interest income, if you have dividends, right, if you have treasury bonds, if you have cash, and this is what I'm saying, cash is the new bond market, cash income is at an all-time high. So interest on assets, which includes treasury securities, which includes dividend stocks, which includes cash, US dollars are considered an asset. Cash, US dollars are paying what, 4 to 5%, whatever it is. And so what that means is the Fed hike rates, they also increase the the earnings on cash. Okay. So Americans, yes, half of them have a lot of debt. They're in trouble. They can't spend as much. But the other half, the people who have a lot of cash, they're going to keep spending because they're actually earning a lot more on their cash from the Fed hikes. So it's kind of neutral here. The Fed hikes rates, and those people who don't have a whole lot of debt but a lot of cash are benefiting. They're taking in monthly income. If you take, let's say you're getting 5% on 1 year, well, you divide that. Let's say you're getting 10,000 a year, you divide that by 12, or let's say 12,000, you're getting $1,000 of cash each month extra. If you're a millionaire, 10 million, 20 million, 30 million, you have that in cash. Well, you're getting paid a lot of money per month, right? 30,000, 40,000 per month. Therefore, interest on income assets are going to keep this market going because people might reinvest it. Maybe they're not in trouble. They're not in trouble. So it's rewarding the savers for the first time. We're seeing the savers, the people who are holding cash, benefit from this, although interest rates are still elevated. Now, this cannot continue. These elevated interest rates probably can't continue because also where's the other chart at that I wanted to show? We're also seeing that I know this is a lot of information. I just wanted to get it through a little bit, ask questions if it seems a little confusing. Here we go. So the other part that I think the Fed's gonna actually reverse on this. I think we're going to see that Fed's balance sheet come into play eventually, right? So I didn't mention this, but yes, cash is whatever. Eventually, the Fed's balance. This is no, that's the Treasury General account. So this is the Fed's balance sheet, right? And I've been saying we got to watch this for a while. I'm probably going to write about it this weekend because I think we're getting close to the. I think we're getting close to the time where this balance sheet, the Fed's balance sheet, historically, it just goes higher, where it's about to start going up again. Yeah, oil's up, oil's pumping. I think we're going to get to the point where this balance sheet has to go up again. Hopefully, oil stays tame. It doesn't get above 83.50. That's the big level. And the reason I say that is because, let me see, where's that chart at? Oh, here it is. Interest. So this is Q2. If we go back to the second quarter last year, which is basically July, August, right? The federal government was paying $648 billion in interest payments. Okay, next quarter, 736 billion in interest payments, 852 in Q4, which was December, November, December, right? October, November, December. And Q1 was 923 billion. So my guess is we're going to be at $1 trillion, and the government taxes cannot cover this, right? Taxes can't cover this. GDP is already low, so we can't really cover this. And what that means is this is probably why the downgrade, the debt downgrade happened too, because interest is going up. You're paying more on interest than you can actually spend, that you're actually incoming. And the only way to actually take care of that is for the Fed to step in, for this balance sheet to start monetizing that debt at some point. So I'm expecting, and we're going to keep our eye on this. I'm expecting, right? This was the big move in March from the banking crisis. Now we're back down to new lows. Well, on this year, we're back to new lows on the Fed's balance sheet. But I expect the Fed's balance sheet to start moving up again sometime, maybe Q3, maybe Q4. I don't know when it'll happen. We don't know exactly when, but we're getting close to the point where the government cannot afford to do this. They're not, they're spending more. They're spending more on interest. So how do you get rid of that? This thing should go up. And when it does, we should see the dollar start to break down for sure. I mean, the dollar might break down on its own anyway, but I think the dollar will go down eventually. And it's tricky. It's tricky times here, but that's kind of what we're looking at. You see, when the Fed's balance sheet did come down, which was what? This was in March. The dollar sort of went lower from there, right? Once it went up. So as the dollar spiked, as the Fed's balance sheet spiked up and you had more liquidity, that was them printing more money. Yes, they removed it, but they did create more money. That money creation, they might have removed it from the banking sector, but they did create more money. So that creation of more money obviously devalues the dollar, but the dollar still, DXY still measured against, other currencies. So it doesn't just drop completely to zero. Anyways, Fed's balance sheet is going down. So once it spikes back up, we should see the dollar crash for sure. The reason why I think the dollar is up though right now, not just because the Fed's balance sheet is going down, but I think it's because these yields are climbing. And when these yields climb, you basically get paid more on your dollar. So people are going into cash, which is why another reason we see people are overweight cash. Now, maybe I was wrong about this. I thought the overweight in cash might have been that people are fearful, but I think they're getting more positive. But now I'm thinking the overweight in cash is just that they're getting a risk-free rate. They're getting 5% risk-free, right? There's no volatility in cash. Are you kidding me? So they're getting a risk-free fixed income for holding their cash. And because of that, they're going to hold it as a hedge against risk, whatever that risk is. They're not doing bonds. The bond market is falling apart to some degree. But cash is becoming the new bond. It's becoming the new fixed income as we speak, because interest rates haven't been this high for a long time. We haven't seen rates this high for a long time. And those people who are in cash, they don't hold credit card debt. They're rich, and they're making money no matter what. They're going to make money on this. And eventually, when the tide turns and the market goes up, then you get that FOMO back into the market. And I think that is also coming. And why might that be? Because inflation is basically non-existent, right? Let's take a look at inflation. This is what's going to get them back into the market. All that cash, CPI, core CPI, sticky CPI, PCE, whatever it is, inflation is falling. It's collapsing. And the farther this falls, the further inflation comes down, the less risk that you actually have in the market. And the less risk you have in the market, the more, the closer we get to those rich people, or to the the elite, or whatever you want to call them. And they're probably already in the market, but they start FOMOing their cash back in, because the Fed is going to get near where they cut rates, or where they lower rates. They stop raising rates. That cash is no longer valuable. They start QE, therefore, and that might not be till 2024, but they start QE, therefore, the FOMO of all that cash that we saw goes right back into the market. Okay, very confusing. Again, it's easier for me to explain it in a, when I do the macro report on Saturday. Unfortunately, I won't be here on Saturday, so I'm just going through a little bit of this right now as we speak. So next, here's the other thing. The Fed is becoming more dovish and more positive and more optimistic about the market. Okay. They're becoming more optimistic about the market. In red, you have, and I put this in the newsletter, the last round, I think it was last Saturday. You can go read it. The Fed is becoming more optimistic about the economy. We've heard this over and over, and they're becoming less hawkish in blue. So that reversal in itself is a signal. Okay, could this change? Sure. If oil breaks above 83.50, because now you have OPEC cutting production again, that's a bad sign. But you also have Biden over here saying, "Hey, I'm not refilling the SPR." So again, net neutral. Maybe it goes up a little more, but he's increased, not going to buy that oil. It's too expensive now, and I think he's just going to keep doing that because he doesn't want oil price. It'll hurt his presidency. It'll hurt his political. It'll hurt his politics. Right? I don't even know the word for it. So he's not going to do that. But for now, the market is a little worried. And keep in mind this, okay? October, and this is why I think we get this pullback. August and September are usually the worst months, okay, for the year. It's really September because you can go back to May, February, but it's really September. We haven't had a big pullback. So historically, if you go back to 1980, not 1980, 1928, you see that September is always the worst month in the market, right? It was also last year in 2022. That was the end of the bear market. They say October is the bear market killer. We bottomed in October. September was all red. We bottomed in October. That was the bear market killer. Now we're back up. So everybody's expecting this pullback to happen. We're seeing it right now as we speak. We're literally watching the pullback. I hope my mouse doesn't give out here. So we are watching this pullback, and that's why, again, here's the chart. We're getting the pullback in August. Maybe we consolidate around these levels for a while, right? Who knows? But on the flip side, shorts are covering. Hedge funds are starting to cover. So I'm going to throw this out here too. We talked about this a little bit in the past, but this is basic, and this is really a bunch of blah, blah, blah. What it means is hedge funds started to reduce their short positioning in June. All right. And the pace of short covering has significantly accelerated in July. So yeah, we're in August now, but that squeeze, we've been seeing the short squeeze happen for a while, and I don't think it stops. I just think it slows down. The short squeeze slows down. Obviously, we got that relief. Now people may be trying to get back in the shorts, or maybe they're relieved and like, oh my God, I got out of that. Now let's flip bullish. We're seeing Wall Street start to flip bullish now. A lot of firms, Oppenheimer up, Citigroup up, pretty much every analyst except for one or institution, they're all flipping. They're all increasing their S&P price targets, right? And we're going to keep seeing that. I think we keep seeing that because the economy is recovering, inflation's coming down, and higher rates doesn't even necessarily mean the market is going to crash. It just means that the economy is okay. It doesn't mean anything, but what I'm saying is it causes more. It ironically, higher rates has given more cash income, has given more earnings on your cash. So I thought that was interesting, right? On a blah, 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 cumulative, whatever. So this is basically just shorts are at their highest covering right here. This is, I think, July, and you're seeing the biggest short covering since October. This was October to, I think, yeah, this is about October to September. So you get all that short covering, and, maybe they get back short again, but there's not really a good reason to, because earnings are also bottoming, right? Earnings are also starting to bottom. So let's jump over to that. It's a lot of charts. I just won't be on here on Saturday to go live with it. So I wanted to kind of go through my thoughts now because there's a lot going on, right? Now, I think another reason that the shorts cover, this is GDP. So you get the Atlanta Fed GDP now forecast, right? And I guess you can't really see it, but they revised up GDP again to 3.9%. Remember earlier this year, it was at 2%. It was at 1.8, and then it was to 2.4. Now they're saying Q3, which is August, September, October, right? And then you have November, December. I'm sorry. Then you have what is it? July, August, September, and then October, November, December. Yeah. So they're saying this quarter, this third quarter that we're headed into in real time, will be at 3%. is it 3.9? I think they're forecasting 3.9%. Yeah, that's insane. So close. That's why it's up here, right? This is 3.9%. So if this does play out, then those shorts will keep covering. They'll have to keep covering because they're betting that we're falling into a recession, and the odds are just dropping. The odds are definitely not in their favor, right? And then also we turn to earnings, S&P earnings, and we have more earnings, but so far over half of S&P companies have reported earnings, and what we see is 80% are beating estimates. All right, EPS estimates, not revenue, but EPS estimates. 64 are beating revenue, which is top line, but bottom lines are getting beat significantly. That's above the 5 and 10 year average. This is continued, and it looks like it's going to continue. We're going to get Apple, Amazon after hours today, and that'll probably also add the nail in the coffin. I think that's the rest of big tech there. And basically, there's no excuses. Inflation's down, earnings are bottoming, the economy is bottoming out, and we're going to get into the macro because we got the ISM services today. So I think the short positioning will continue. This is a pullback that is very likely just to get bought up. I think this pullback is just going to get bought up, right? We are looking at a S&P here, and look at that 4,400 area. That's it. That's that 4,400 area, I think, is the support line. Okay. Now, ISM services today, we're down month over month from last month, but we're still above recession territory. We're still moving up, right? So this is the service economy. It slowed. It did slow. We're still expanding, but not as fast this month, or if a reflection of July. I think this was July, right? Oh, I guess it doesn't show right here. This is the July reading, though. This should be the July reading, and services slowed a bit, but we're still in expansion territory. So the service economy or activity, business activity, which is one of the key things Powell said he's going to keep his eye on, is still expanding, but not fast, right? So the fact that it's still chugging right above 50, right above the neutral zone, tells us that this doesn't give Powell an excuse to hike rates. It doesn't give him an excuse, or it doesn't give fuel to the fire, or it doesn't give you more variables that would suggest he should be hiking further. Maybe he does, but alone, that's that's in the favor of a pause, holding the pause. You go to employment is down, right? Month over month. So that's reason to pause. And we're going to get more job numbers tomorrow. Factory orders were up. So, I think the manufacturing sector is starting to bottom. ISM, what else we got? Business activity was down. So it is cooling. It's still pretty hot. It's still good, but it is cooling. So no reason to hike there. Service. Now this isn't very great because you get prices paid up a little bit. They did bounce above, the past 2 months. They went higher than the past 2 months. So that's a negative, right? That's negative because that suggests that there's some wage growth happening, which isn't bad, but it isn't positive. It's kind of neutral. If it keeps going up, then we might be in trouble, because what you don't want is orders to be dropping while prices go up. You definitely don't want the prices to run the service economy higher while, the actual demand is lower. But demand is pretty, it's at 55. This will be good. If we just chug around 55, then we're okay. All right. So no reason to hike here. No big reason to hike here. If we look at the ISM data, weekly jobless claims are down. So the economy labor market's still tight. A lot of jobs. There is no, there's no big spike. I don't expect the unemployment rate to really spike. Maybe it goes up 1 point. Maybe it stays where it's at. That's what it looks like we're seeing. Unit labor costs. Okay, well that's not a year over year measurement. That's always going to go up. Yeah, that's what we're seeing. So the macro, right? The macro setup is the economy is strong, inflation's coming down, manufacturing is recovering, services are pretty mild, but they're still expanding. And the biggest risk is the 10-year yield keeps going up and hurts riskier assets. But if the 2-year stays where it's at, then the bond market is okay. And I think there's some people talking about yield curve control also happening. Some yield curve control, which would be the U.S. Treasury targeting. They're targeting the short term of the yield curve to bring down those rates to strengthen the economy. And I don't know, who knows what's going to happen, but the VIX is responding. We got a big jump in the VIX for 2 days in a row. So the VIX is starting to scream, hey, there's some risks here. People are buying protection finally. Now the trend is still lower, so maybe that doesn't really make a big difference. Volatility of the VIX is whatever. Nasdaq volatility moved up. Move index, this is what we don't want to see. We definitely don't want to see bond market volatility move up too much. Still pretty, it's not moving up too hard though. And then triple B spreads, right? Triple B spreads actually made a move higher. So this suggests that that there's a little move, there's a small move out of equity credit, right? A small move out of equity credit. You know, it's not a big move yet, still trending lower. So a small move out of there, not negative. And then and probably there's probably a pile into those short-term bonds because they yield so much interest. They're yielding so much fixed income, right? Big negative here is oil. We did get that rejection at 80. What was this? 82.40. Got the big rejection. Looks like it's coming right back up because we did get a OPEC. I don't know who it was, Saudi Arabia. Somebody signaling that they're going to cut production even further. This is the big risk. Still remains the big risk. Nothing's changed there. Hopefully that's not the case. Now, Trueflation. I looked at Trueflation the other day, and Trueflation did show 2.25%. So we'll have to wait for those numbers. I think the market will find its bottom after the next inflation report because it'll show that core is coming down, right? Headline might be sticky, obviously, because, you know, hey, headline includes energy prices, and energy prices are still going higher, right? They're still elevated by this oil price. But core, I think, is going to make some progress. So I think the market will find some peace at that. Okay. Now, if we look at the equal weight, big, you know, capitulation to the downside. Equal weight S&P, Nasdaq is at support. If you look at NDX, which is the big index, Nasdaq is at support. This is the first support line. We'll see if that holds up there. SPX, not there yet. So S&P still has room to fall. This is your support, 440, 4,400. SPY is a little different than SPX. So keep that in mind. All right, what else do we have here on the macro? Oh, as far as if we break down the S&P into sectors, industrials are down, consumer discretionary is down, or is that no, healthcare is down today. I think everything's down. It looks like utilities are starting to go bearish. Discretionary, it's up today. A little bounce in discretionary. Consumer staples were up yesterday, kind of neutral today. Communications up today. They were negative yesterday. Financials, whatever. Energy's up. Now, energy, here we go with energy. I think energy has the best valuation fundamentally. So you might see a lot of energy stocks up, Chevron, ExxonMobil, whoever it is. So energy's keeping up the market at the time right now. Builder was this materials, not materials are down. Real estate, I mean, I think this might be the worst one because of that commercial real estate. Residential is okay, but commercial real estate is going to weigh. There's not a whole lot of buyers in commercial real estate at the time. Home builders down, double topping up there. SMH had a big pullback, so it's not breaking to new highs yet. And then the regional banks are still chugging higher, right? Regional banks are showing no big risk during earnings season. And we thought this would be the worst because the banking crisis happened in March. So we should have seen a lot of big losses, which you did see in some of the regional banks. But so far, the index is not responding to negative. And I think that's just because the Fed has an emergency lending facility ready to protect those banks, ready to support. Okay. Where do I see Tesla at the end of this week? Yeah, we'll get into that. I know that was a big rant there. And there's a lot of information, a lot of confusing stuff. But for the most part, cash is turning into the new bonds, and we'll keep track of that to see how that plays itself out. Let's get to the trading charts. All right, so let's take a look at what's going on here. S&P is finding some legs today. It's not like a crazy, it's not like an extreme sell-off where everybody is just fearful. It's not an extreme sell-off. We're not seeing that yet. One second, make sure I didn't. Okay, so S&P, here we go. We have support. Just be patient, right? Be patient. I guarantee you that if anybody did short at the top here, there's a lot of signals to short. Couldn't get above that big candle. They're going to cover into the support, whether it's 446 or 444. We might touch that today after hours for Apple. or we might touch it tomorrow morning or tomorrow at the end of the day. It could be an earnings, earnings sell the news, and then next Monday we'll see, okay, right, next week over the weekend the market will digest Apple earnings because Apple is bigger than the small cap, so it carries a lot of weight in the market, and we'll see how that plays itself out. I know I missed a bunch of questions here. Any Apple earning predictions? Not really. I think they beat top line and bottom line revenue. I mean, I could be wrong, but guidance is going to be important. China is going to be the big one. They have such a big business in China. The question is, well, what are the numbers going to look like in China? I still think China is going to keep stimulating. Eventually, they're going to have to start stimulating again. They've already mentioned that they're going to do it, and that will bring expectations higher for Apple, right? So we're looking at the global economy here. It's shifting. It is starting to strengthen in some areas. The banks for the downgrade by the dip. 10-year bonds up will pull market down. Yes, it will pull some of the market down because the 10 years the benchmark rate for most borrowing. But I think the Fed is orchestrating with the Treasury yield curve control, and if it doesn't work, the Fed's balance sheet is going to step in at some point. Okay, market's looking strong right now. By the way, we're up on advanced decline is up. SPY's up, small caps are up, Dow's up, Q's are up. Everything's up right now. So we are bottoming after that triple B, after that downgrade on the debt. Hey, thanks for the likes. I appreciate it. Big man's coming. Appreciate you every day. Thanks for showing up with the energy. Love the energy. Big man's coming. I'm gonna get to Tesla right now. I do have I do have some. We do got to do the Tesla technicals, so we'll get there. I just want to get through some of these comments. I ranted for a long time. What up, William? Good afternoon. Yes, sir. Great afternoon, no matter what. Let's go. ZM on the rebound. That's right. Teladoc. Also, there was an article on CNBC about Teladoc. Somebody who had revised their S&P target up to 5,000 was talking about buying the names like Teladoc, who are expanding their growth. They're not profitable yet, but are expanding their business models. And he was talking about buying Teladoc. Amazon just came out with I think Teladoc also got weak because of Amazon came out with their new telemedicine program, but they're not far ahead of Teladoc. Who knows? It's going to be a battle there, right? So you have Zoom, because I'm long Zoom and Teladoc. I think as a trade, right? I don't think they're the next Tesla, but as a trade, they're very suppressed. They're riskier assets. They're not profitable yet, but this is where the big opportunity lies, especially when the macro is turning and the market is starting to shift higher. And there hasn't been a rotation into those stocks yet. There has not. That rotation hasn't happened. When it does, it went into open door a little bit. When it does, Zoom, Teladoc are going much higher, right? So the story is Teladoc is now going to be competing a little bit with Amazon. So we'll hear that narrative. They're also but they're using it's funny, they're using Microsoft's AI, their whatever AI they have, to increase whatever it is on their for their business operations. I don't know the detail. I don't know how to explain the details because I'm more of a technical analyst, but I did read up on it. I just don't remember it. The only thing I remember is Tesla and crypto stuff. That's about it. Okay. I can't remember everything. There's so many stocks out there, so many things going on, but Teladoc is the leader, and it's actually a pretty good service. You just call them up and they do, you do a video, and I like the service. I think it can definitely last. They do have some headwinds though that they got to get past, but hey, we're looking for the big trade. All right. So, and then you have Zoom, who is battling against Microsoft, but Zoom, I think on their earnings call, which isn't until August. Oh, it's coming up. Zoom's earning call, they should be talking about AI and how they're using AI to enhance their business model also. And I think they have a lead on a lot of things. I listened to a couple analysts on them yesterday, so I'm pretty optimistic about Zoom going higher. So Tesla, okay, what else we get? Yeah, thanks, man. Yeah, I am. It's yeah, I do. Hey, I'm learning a lot. Even if nobody learns, even if it's confusing, I still learn more stuff about the market just trying this. Before, I would just look at the markets and look at the technicals, read a couple of stuff, but now, like, diving into the macro, I really enjoy it, and I like to spit it out because there's a lot of information that's misleading, But there's also information, it's just hard to understand what the hell they're talking about, right? Like the whole bond market is so confusing. I didn't know crap about the bond market over the last 3 years. I didn't know anything about that. So I had to start learning how the bond market worked. And it's confusing trying to explain it. You need charts to see it and what corresponds with what. But I think right now what we're seeing is there could be a dump in treasuries from other countries, obviously like China and Japan, who are dumping US treasuries, and it's putting downwards pressure. But eventually the Fed comes in. Eventually the Fed will come in. They'll have to start buying those treasuries to knock down the interest payments for the federal government. They can't keep it up. So the Fed will come in at some point, start yield curve control, start buying up US treasuries again, and those yields will come down because they have to, because the interest payments for the government are way too high, right? People are going to doubt that. They just hope that everything falls apart, that the world crashes and everything burns. But it's just, that's just not how things, it has to be a surprise, right? There has to be a surprise. If you can see it coming, you can see it coming. We don't know when, but we know it's going to turn. We know eventually that the Fed is going to shift gears. Maybe it's not till next year, halfway through the year, but they are going to shift through, and the market is sniffing that out. And that's why we see the market continue to grind higher. Do a podcast? Yeah, that'd be cool. I could definitely start a podcast. I need some other people that'll jump in so I could talk. A lot there. I don't really know a whole lot of people. That a lot of people are busy. A lot of my friends, they have full-time jobs, so podcasts would be tough for them. But hey, if anybody's out there, you want to do a podcast, let me know. Market podcast. All right. So, anyways, I'm liking JD, the Chinese company. Thanks again, Big Man's coming, and Slime Z, Chavez, game one. Let's see. It's recession-proof AI. It's pulling back. That's my honest opinion. Yeah, AI is sort of recession-proof. I mean, you could use AI in a bad way where you're just saying AI is everything, right? But you're right. In general, the demographics in general, the secular trend, AI is going nowhere. It is very explosive. And that's why I think mega cap tech will just keep going to all-time highs. I think Nasdaq will head for all-time highs because AI is just too powerful. It's happening in real time. You can track it in real time. It's a structural change in the economy. It is literally an arms race, right? From China to Taiwan to Europe. AI is an arms race. It is. If you watched Oppenheimer, there was an arms race for atomic weapons. Well, this is the arms race for AI weapons, right? And it's not going to slow down. It will not slow down. There will be more government spending in that. And that's why I'm really bullish too, because, hey, whoever's in the White House, it doesn't, like, they have no choice but to spend on more on anything AI and chips and technology. They have no choice because they will fall behind, right? Just like the Cold War. This is another Cold War. And I think that's where we're headed, right? All right. So really, and JD, I'll check out JD. I haven't seen JD. You have to go to work. All right, William. Lucid consolidation off the top. I'm about to, but scared to pull the trigger. Okay. All right. So let's go before I get to Lucid or some of those other ones. JD. Here, let me just throw them on so I can remember in my head. JD chugging higher because I want to get through Tesla. I like what Tesla's. I'm very excited to see what Tesla does next. Oh yeah, JD bottomed out. Definitely above that support 38.25. That looks good. Yeah, JD looks pretty good. Actually, let me move this over here. There we go. So JD's looking good. Nice bottoming. I mean, look at this head and look at this head and shoulders on JD. This is beautiful. Reverse head and shoulders. I wish I could draw on this the way I do with the trading view. Reverse head and shoulders breakout, right? I'd say the neckline is like 38.50. So JD looks very appetizing. Look at that. That looks very appetizing. JD breakout. I mean, obviously it has to clear a couple of the resistance levels. Right? You have some resistance up here. Actually, no, I don't like that. I'm going to put it right here. You have some resistance here for JD. But as long as JD, because you're waiting on that Chinese stimulus, it is coming. Come on, dude. What is up with my golly, pisses me off. So there is some you got to wait for that stimulus for China. You don't have to wait for it, but you are waiting for it. The stimulus is coming. JD will go higher. It's already breaking the downtrends, turning back up. The RSI looks pretty good. The moving averages are probably solid. Let's look at those moving averages. Macro, it's above the green, right? The 50-day moving average is about to cross the 100. If this momentum continues, I expect it to continue because their central bank is going to start printing again. They've already printed in October, September, November. They stalled a little bit, and they're going to start printing again. They'll do it. It's coming. It's coming. Central banks around the world will debase their currencies, right? Because there's no inflation in China. There's no inflation in China. Rely. I gotta save the best for last. I'll get to Tesla. Big. Oh wow, big move for Rely. I don't even know who this is. Never heard of them. I don't even know what that is. That's a Chinese group. Okay, looks fairly new too, huh? Maybe it's not new. Yeah, it looks like a newer. Looks like it's. Oh, okay, yeah, it is fairly new. This opened up what 2021. Okay, bottoming out there, man. You guys be finding these names. See, there's so many names in the market. That's why you got to know technicals, because you can't do fundamental analysis on every stock. That's too much information. Good utility. Okay. Loving your GED guy. Hey, as long as we get smarter, better, we're good. Lucid Air, LCID. Hey, if Apple comes true with, app people buying Apple, that's going to be interesting. Freddie Mac upbeat economic data, government credit rating downgrade. What? Freddie Mac downgraded government debt? Who knows? Save best for last. I got to save the best for last for sure. Okay, so here you got Lucid Air. Lucid Air kind of wedging there. Man, if Apple ever steps in to buy Lucid Air, which I heard in the past, I don't know if it's true or if it's real. I don't have time to look into that because full self driving is I'm waiting for that full self. I'm sorry, I almost put that in the ticker. I'm waiting for full self driving, the announcement. Hey, look at Tesla is showing some support off that 50-day moving average. That's good. That's positive, right? And we're at the trend. We just got to hold this trend. We are testing the trend, the uptrend. It looked very negative yesterday, but the overall market is bouncing. So, hey, this doesn't mean we're going back to the highs yet. It just means that there are buyers. Okay. Now, what I love about Tesla, this RSI has almost made its way back down to oversold. And typically you get a sharp upside move once you get to oversold. Last time we were oversold, obviously the volume started to come in, a lot of consistent green volume, and we had the move. The last time we got down here, we had the move from 150. Dang, this is when I first got into Tesla around, I didn't get in until here. This is a daily chart. I think I started getting at 187. And then traded it up to about 260. And so we're almost back down. The RSI is almost back down. And hey, if the overall market moves, this is going to be a big bet. A lot of good options, volatility on that. Shares are definitely safer though. So that's looking solid. Dang, this sucks. That's looking solid. Big tech setup. But hey, today we get Apple, Amazon. This is going to be interesting with the market sell off. Hey, be prepared. We might have a nasty downturn today. We might have a nasty downturn. All right, let's go to the 4-hour chart. Take a look at what it's looking like. We're getting some consolidation at those levels. 250, right? 255 was where we could have bounced. We didn't. This is pretty bearish in the short term, to be clear. It's pretty bearish because, see if I can extend this. Why doesn't it let me extend this drawing? I saw it one time. Either way, support was 255. Now we're seeing resistance against that 255, 250, 257 area. So hopefully, if you're a Tesla bull, RSI is turning up a bit. So we're getting some bullish divergence on the RSI. On the 4-hour chart, a little bit of bullish divergence. It doesn't mean nothing yet, but we're getting some bullish divergence for Tesla on the RSI there. And we need to clear this level. We need to get back above 255 and really hold. I think we're above it now, but we're not holding enough. Let's see what the intraday price action is looking like. Okay, not bad. Not bad. See where we are versus VWAP. And again, the overall market's more important than just the Tesla price action today, because yesterday's high at two, we got to take out the previous day high, and we got to take out this gap fill at 261 to really turn back bullish. We got to take out the 261 gap fill and 259. So we have an area there. We're just not there yet. We'll see how VWAP holds. It looks like VWAP is turning into support. It was resistance earlier in the day, and now it's turning into support. So we got two areas of support there on the VWAP, but I still think this is being held up by the overall market. The Qs are up, retesting the zone. IWM is up, SPY is up. Dow, I can't see because this is in the way. Dow just filled the gap. Well, this is the Dow index, so I don't know what the real Dow looks like, but Dow filled the gap. Apple earnings. What is Apple looking like? What are we looking like on Apple? Just consolidating at the highs? Nothing too special. If you are in the chat, hey, throw out some technicals. This is my expertise. If there's anything I'm good at, it's the technicals. Okay. If there's anything that I can do, it is the technical analysis. Macro is interesting. I have a lot of theories on macro, but I think the biggest part is inflation is coming down. So damn oil price, man. Oil is scaring me. Oil is starting to scare me, and these fools cut production again. It's like, bro, come on. But you never know with commodities, right? Somebody could revert. It's not like it's a secular trend. It's not like oil is a secular trend. Eventually somebody can increase production or and just knock the price back down. A lot of traders there. But it does look like oil is more likely to break out currently, unfortunately. It does look like oil. SLB, okay. SLB, let's take out SLB. SLB. Take a look at SLB here. Consolidating, okay, nice consolidation. This is Schlumberger. This is a building. I think this is a buildings material company, right? If I got this right. Schlumberger, or is this oil? What is it? Oil, utility, oil, building materials, oil, something like that. I think it's builders. Schlumberger sounds like a builder, like a industrial, or maybe it's industrial company. One of those. I don't know. Sounds like lumber. Anyways, Schlumberger has an ugly pattern. I mean, I don't like this pattern, but it is consolidating, right? So I'm not used to the price action in it, which just means, hey, every stock trades a little differently. Is there history of Schlumberger trading with this nasty pattern and moving higher? Possibly. It looks like a breakdown back here. At this time, it did the same thing, kind of consolidating, and it broke down, right? It broke that trend. Come on. So last time this trend broke, when it had that kind of making slow highs, kind of broke down. So it looks like it could be breaking down. But again, we got to keep in consideration the macro, which is why I am learning the macro now, because even if it has a certain price history, the macro still might be more important. So depending on what kind of stock this is, Schlumberger, what is it? Somebody tell me, what is Schlumberger, so I can do the technicals here, because it depends on the sector too, right? The sector is important. And where does this lie? What sector, what industry is Schlumberger? But I like this volume that came in earlier in the year, especially right after earnings. So I think that's a good catalyst there. Schlumberger, Saudi extended 1 million barrel cut in September. Yep. Okay. Oil's not pumping like it should, but I see the trend. Yep. Schlumberger's resistance is pretty much at resistance 59. Looks like 59 is the resistance there for Schlumberger. So I would just say, hey, you get above 59, right? You got some fuel there. Intraday for Schlumberger. Is this on the watch list, right? Let's have Arval. It is filling the gap. It just filled the gap at 58.34. It's reversing off that gap. Look at that big reversal off the gap too. 58.34 was pretty much the gap. 58.34 was the exact gap. It actually filled that gap perfectly and reversed lower. So there's nothing here I like about it, but I would say support is at 58. got to hold 58 and above 59, that zone. 59's a ways up here. You got to break out on Schlumberger. Oil field service company. Okay. Oil field service. All right. Well, yeah. What is ExxonMobil looking like? Is it XOM? Yeah. Yep. Up. Oil's up. Energy prospects are going up, even though they have the most negative earnings, but I think they're bottoming. ExxonMobil, Chevron, is it CVX? Chevron moving up a little bit. See how Caterpillar. Oh no, I don't want to see that chart. Let's see what Caterpillar has been doing over the past. Hey, you might have a breakout here on possible breakout on Chevron. Hey, if oil goes higher and energy goes up, got to go with the trend. It is breaking the downtrend. It's above the shows a lot. We obviously seen a lot of support here. A lot of support here on the 100 daily moving average for Chevron. It just moved off that. So, and that was a previous resistance level, which is about 161. So, Chevron holding 160 to 161 could be a nice move. See what Exxon looks like again on the bigger. Same thing for Exxon, right? It's been sliding lower. Could be breaking out here. Could see a breakout on XOM. I mean, if you're just trading oil, it's been pretty bullish also. Looks like Teladoc is finding some room to the downside, possibly from yesterday. Could be bottoming. I didn't get to this chart, but you also have disposable income is outpacing PCE inflation. Annual growth rate of disposable income, so dividends, well, disposable income in general that people don't have to spend on bills is up. All righty. What else do we have going on here? Oh, we have this dude. Who is this? Ooh. Investor says S&P 500 will hit 5,000. And then he names the stocks to buy. So this was that piece. I'm gonna go back to the Qs. Q. Anyways, anything else? Yeah, the Qs are finding a little bit of support here. Let's see if Nvidia bounced. Oh, hey, that's what I was gonna say. Nvidia is actually forming a nice wedge. If it does find support at this level, you're getting a descending wedge. It might have a little more room to go. Obviously, you want to see it clear earnings, but Nvidia on the, let's go to the macro time frame here. So it is coming into that 50-day moving average. Okay. Might find support there, but you do have a possible falling flag pattern or falling wedge starting to form. Maybe it falls one more time. That actually would be perfect if it falls one more time into the 431 area or 430, pretty much 430, 429.50, whatever. 426, some people say. I think A said that yesterday. But if you get this start to form, then that could be a potential pattern to get in on a bigger time frame. Do your own effing research. Hey, thanks. I appreciate you, man. Appreciate the love. TTOO is trying to get listed on Nasdaq, but needs to be $1. Think it'll pump there or reverse split. TTTO. I've never even heard of that. Don't tell me this is who is this? TTTO. Penny stock biosystems. Man, these things are always. I'm always worried about the. Yeah, this is a penny stock biotech. Know nothing about it. I mean, I wouldn't bet on something getting listed on the Nasdaq because you're really gambling there. You don't know, especially something like this that probably has a tiny. Let me check out what the fundamentals are here. TTOO TTOO. This is T2 Bioscience Diagnostic Research, very micro cap. I mean, it's $110 million micro cap. You're taking a bet here for sure. You're taking a bet here for sure. I wouldn't bet on it, but you do have IBB going up. I don't know. You this is something you'd have to know more details about, and you're gonna have to get lucky. You had a lot of downgrades over the past 6 months. But I don't know nothing about them. It's a bioscientist, biotech. So check out the biotech ETF. I would keep my eye, if I were you, I'd keep my eye on IBB. So big gap up there. Does it continue to run? I mean, it's a penny stock. There's a gap to fill up here at $1. It's at 38 cents. See what the intraday price action looks like. Yeah, it's a biotech. It's 100 million. So this thing can get moves very easily. That's the problem, is that it can move. So if you catch the bottom, you catch the bottom, but somebody could dump the shares really quickly, right? Watch IBB. That is the ETF for biotechnology. I don't even know if this is in biotechnology at all. BB TTBB. I have no clue if it's actually in there. But once you get the biotech ETF turn into a bull trend, then you're more likely, your probability that that stock goes up is going to increase. But again, something bad could happen. They could fail on some research or something, or maybe they do good. Who knows? So it's really a big bet. I wouldn't bet on it myself. EXA, Amazon earnings after. What up, Dimaj? Thoughts on Amazon earnings? Let me put this EXA up there. I've never seen it before. I bet you this is another penny stock, huh? People love EXA. Oh, actually, I don't see it popping up for some reason. Not on my TOS. SPA, RB, KP. Okay, I'll get to those. Real quick on Amazon. Let's see, Amazon earnings. I honestly don't really know. I just want to see their numbers for AWS. I want to see their AWS growth. I want to see retail growth. I don't really care too much about. It's the Amazon AWS, because once the economy starts to rebound, I think Amazon AWS is. I mean, I'm sorry, the retail sector segment will be fine. I think that's a little more cyclical with the economy, but AWS is their bread and butter. So I want to see how is their cloud growth, how is their I want to see that. I want to see Amazon AWS growth, and I think that's going to be important for Amazon. Amazon's been holding well at 131. Yeah, it's been consolidating. I mean, it's at the same price that it was. What this was, so we're at the same point we were back in June, or is this May? Yeah, June. The very beginning of June. So you've had 2 months of consolidation in Amazon, which could amount to, nobody's bought, like, there's not a run up versus like Tesla ran up into earnings. It priced in good earnings and sold off. I don't think Amazon has really priced in great earnings yet. Maybe it's neutral, and stocks are always like where people position the most, right? So are they underweight? Are they overweight? Are they neutral? Amazon. And then next, is sentiment positive or negative for Amazon or for the market? I don't know. And then next you have expectations. So will they fulfill earning expectations? And then you have the earnings call. They have so many segments. They're doing telehealth communications. Everybody wants to hear what they have to say about AI. So I would say, hey, next 3 months, Amazon's higher, definitely. Still a monster company. But yeah, it's been consolidating for a while. All right, so let me take a look at these SPA. Oh, that's a crypto, X a crypto. Oh man, I don't know what this is. Spartan Corporation. Big gap up earlier. They probably had some acquisition or got acquired. I mean, this looks like I can't do technical analysis on this. SPA, there's no technical analysis. It's just, it's probably too small. I don't know what it is. Let me see. What's the market cap? If the market cap is smaller than like a billion, it's really no. I won't do TA on that. There's nothing there for SPA. I have no clue what it is. I can't see the fundamentals of it or anything. Let's go RBN. Dang, this looks similar. These must all be similar. Robin Myers. What are these? What the heck are these? RBN? That's not even listed on FinViz. So yeah, they're what is this company? There's no news. Yeah, I can't do much on this. I mean, there's just price, but there's nothing else. I have no other context. CRPT, I'm guessing these are all the same. I'll go through them. CRPT, this looks like it has actually price action here. No clue. There's nothing there. First exchange traded FD Skybridge crypto industry. Yeah, these sound really risky. I mean, it looks like if it's part of crypto, it looks like MicroStrategy. Looks exactly like MicroStrategy. You got a falling wedge there. If it breaks the trend, could have some upside, but I don't know how big the market cap is. If the market cap is small, then you just don't know. But you do have a falling wedge here. Maybe the break above $7.50 for CRPT. Dude, what is this stuff? CRPT. Okay, this one actually you could see what it is. Oh, no market cap. Oh man, these are dangerous. There's zero market cap here. Um, exchange traded fund. Maybe that's why. Digital economy ETF, crypto industry digitally. I wouldn't bet on these. Me personally, I wouldn't look into it. Maybe you know more than I do. Have no clue. There's like no information on these. That's why I say that. There's no information. Can't really. That's kind of sus. Okay. A little bit of sus. OGN, HNT. Look into Chainlink. By the way, guys, I just released a post on Chainlink. So some of you crypto guys, if you're like, hey, what crypto? I'm not shilling any crypto. I'm not telling you what to buy. Bitcoin, Ethereum, obviously, but I think Chainlink has a lot of. I think Chainlink has some potential here. Okay, so just so you know, go check out the website. Right, it's the most recent post right here. The number one most underrated crypto project. Right, so go into detail here. What is an oracle? You can even browse through clicking the headlines here. Right, you can browse that way, and basically comes down to why back when Chainlink got under $5, why I started buying Chainlink at $5. Right, 1,000. I got 1,000 link here for 5,000. It doesn't tell me where I got it in, but or exactly what price. But it does. Obviously, if you do the math, 1,000, 5,000, so about $5.60, somewhere around there. All right, so go check that out if you want to learn more about Chainlink. And I have a lot of explainers and links that you can click on to learn more about it. That's a real project. I think that's the most underrated project. Nobody talks about it. You hear all the other stuff that people talk about, which is mostly trash in my view. Okay, so back to this HNT Health Net Inc. There's zero news on this. Um, let's see if I can find something here. HNT. Oh, by the way, a lot of people are also filing for Bitcoin ETFs. HNT, nothing here. A lot of filings for ETFs. A lot of filings for ETFs. Like 9 more filings. So we're tracking the Bitcoin. I mean, when that ETF gets released, it's going to be very explosive for crypto. Unless these were all cryptos you're talking about, Mr. Vozzy G. Oh, so these are all cryptos you're looking at. Okay. These are all cryptos. I was looking at the wrong stuff here, probably because I'm looking at something else. Um, Appreciate it, Isaiah Fielder. That's my brother right there. He can explain Chainlink to a T. Amazon has been holding very well at 135. Yep. And Dimaj says in phase energy, it's a really good buy at the moment. The company has the best balance books I've seen. In phase ENPH. Boy, I remember ENPH back in the day. ENPH back in the day when it was at $4. Yeah, this will be a good if you can wait. Like honestly, if you can be patient. ENPH looks like it's coming back to 121. If you can be patient with this, probably a very big winner from my understanding. I've never done a deep dive into in phase. But one of those solar energy names, there's not a whole lot of them. So could be a good one. Hold on one second. I'm gonna grab some coffee really quick. All right, I'll be right back. Give me a second. All right, we're back. Thanks for hanging in there. So he said these were all cryptos. No wonder, bro. I was looking at the wrong. You guys got to tell me a little more clearly. I thought these were penny stocks. So these are all SPA USD. Oh, now I see what you're looking at. Now I see what you're looking at. Well, I'll have to flip over to the other chart for that. Here, let's go to this chart then. So this is SpareX. I'm gonna say it right now. These are all trash, probably going to zero over time. But if you're just talking about technical analysis, I mean, honestly, there's really nothing here either for technicals. I mean, this is the daily chart, SPA USD. Uh, there's no look at for me. I want to see a pattern. There's no pattern here. It just pumps up. Okay, let me go to your next one. RBN USD. There's not really a whole lot of volume. These are things. These are probably penny stocks you have to get lucky on, and I think it's a waste of time unless you're a professional and you professionally scam people into buying these trash stocks and you market it. That's usually not stocks, but cryptos. That's my opinion. Maybe maybe I'm wrong. CRPT, ETUSD. I'm gonna go through these rather quickly. They're probably all trash projects. Crypterium. You got to understand most of these are trash. They're scams. So if you're investing, I would say hell no. But if you're just looking at the technicals, maybe you have something here. This one might have a little bit of technicals. CRPT, Crypterium, United States. Yeah, this one has a wedge pattern. So hey, CRPT, nice little wedge. I don't even know if there's any real volume on this
The
thing.
current volume is 100%.
Yo, I'm not talking to you. So yeah, CRPT maybe over 1 cent. What is that? 1 cent? Yeah, but still, I don't know what that is, man. I don't even know how you're gonna catch it. Too dangerous for me. HNT USD. I did miss these. HNT USD. Uh, okay, this one looks what is this? Helium? Oh, this is helium. So this is an actual project, even though I don't know the fundamentals of the project. Isaiah probably knows what they are. Helium. This one has some volume. Man, their daily charts are trash. Maybe because I'm on the wrong HNT USD. I'm probably on the wrong exchange. Let's go to the Bybit. Usually has a bit. Yeah, there we go. Bybit usually has most of the history. So, oh my goodness, this is this thing might be bottoming out. Helium. $31 to $3. I mean, I would say this helium has a clear bottom. I like it looks like it has some bottoming action. It is starting to bottom a little bit. See, so you got boom, 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 right? You got some bottoming, but helium over $1 and maybe over $2. Helium over $2. But again, these things, they just don't trade they don't really trade that great. There's just not enough volume here, so maybe even closer to like $1. But maybe volume comes in over 2 for helium. I've heard about helium though. All right. OGN, last one. OGN. Oh yeah, showing okay, you have an actual wedge pattern here forming. But again, no clue. What is this? Origin token? Yeah, sure. Sounds like a trash project, so I don't know. Looks like a rug pull. So yeah, you got this. Lot of resistance here. I mean, it kind of broke out already. I don't know. None of these really seem to have a strong pattern. These are all like hope to get rich coins, right? Hope to get rich. They're down 99%. Hopefully I get rich on these. These are gambling. You might as well go buy a lottery ticket. I'm being a little exaggerative, but you might as well go buy a lottery ticket. Too much emotional capital and a waste of money, because you have to get lucky, basically. Ribbon Finance has a new crypto options arm bullish. RBN USDT is Ribbon Finance. Where are you reading this info? I'm curious. You're using CoinMarketCap. RBN has covered call pull for Ethereum. Okay, cool. So it has something you can do. Yield or use DEX screeners. DEX screener. HNT is Helium is a new crypto that just came out. Okay, Helium. I thought I've heard that before. You have to put USD after these crypto. Oh yeah, I just put them in. These are all cryptos. Yes, got some picks in there. I know crypto over anything else. And I'm with you. I'm a crypto guy, but I have probably a different view. I'm not a maxi at any degree. I'm no maxi. There are support patterns for most of them. I catch 20, 50%. Oh, well, if you're a regular, if you know what you're doing, then go for it. But I mean, price action is a lot different for different. If you're trying to invest, I would say hell no. Like I said, what is the world? What the world is in you doing? In you? That's not a crypto, is it? In you holdings. In you. All right. So, and we got the charts over here on Bluetooth, and we're coming in at 90 minutes. Remember, my max. Usually I do a 90-minute session. So ask your questions now. We'll get back to the stock market in a second. Hey, it looks like it's kind of wedging, but what is NU, right? Because NU is wedging. I always say it's a wedge. It's not like a great wedge. It's like a grade C wedge. It's not really a grade A wedge. Could be rolling over too. NU holdings could be rolling over, or consolidating. We'll see. It's climbing higher, little at a time. You buy them to use them in DeFi. It's called innovation. Oh, okay. So you use them in DeFi. All right. So you buy them to use them in DeFi. Hey, remember Terra Luna? That was you could yield 20%. Be careful is all I'm saying. A lot of these coins can get disrupted pretty easily where they go to zero or there's some type of something falls apart. So if you know what you're doing, go for it. But I've seen guys who knew they were buying Lamborghinis, they knew what they're doing, and their coins went to zero. In particularly the Terra Luna collapse destroyed a lot of people. So DeFi is still risky, man. DeFi is still very risky. There's no promises there. I believe in DeFi, but it's not totally built yet. So don't get too hyped up in DeFi. If you know what you're doing trading them, go for it. And if you know about DeFi, you should know that all your coins don't work without Chainlink, which is why it's more of an investment. XRP, XLM, XRP, XRP. Um, XRP is dumping because, I'm not a fan of XRP, to be honest with you. When the bull market comes back, it probably goes higher, but I just think a lot of other projects sort of take care of what XRP is doing, or they fill the use case, right? There's so many use cases. There's not a whole lot of real use cases in the world, and XRP can be part of that. But technically, XRP is dumping, right? That whole, I think this is XRP. I'm pretty sure. Let me make sure. XRP USD Bybit maybe. Bitstamp. I know that's an old. Yeah, XRP is dumping. It looks like trash. I mean, it's beneath 66 cents. I know people get their feelings hurt because they're so tied ideologically to a coin. Hey, I've been in all of them. I've been in synthetics, derivatives, Decentraland, Mana. I've seen them all. But when you do the research, a lot of the coins are trash and their development sucks. They're not making a whole lot of progress. And if you're trading them, then trade them. But you can't get all your belief into something and be stuck on it. You got to be able to pivot. Investing is about being able to pivot and understand what's going on. Do your research. Like your name, do your own research, right? Okay, back to the YouTube comments. Thanks for the daily recaps. Yeah, I'm glad those are good. I like Chainlink. I read your report on Chainlink. Thanks, Dimaj. Yeah, see, that's a report. I want to see people have a real report on Chainlink. Swift Network is using Chainlink, right? The CEO, the former CEO of Google, is literally working with Chainlink for a reason, right? Citigroup says Chainlink is going to run DeFi as a reason DeFi could actually move higher. Bank of America, very bullish on Chainlink, says that it could be larger than Bitcoin. Not saying that will be the case. The whole tokenization world is going to come down to Chainlink's CCIP, which is like TCIP. So there's a lot of research behind it versus all this other stuff, XRP and blah, 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 blah. Like they're just coins. A lot of people get wrapped up around them because they have their whole net worth in them, or they just believe in, everything. So do your research and be able to pivot when it's time to pivot. I've been in companies like that I thought would do really good, and I did more research, and I was like, dang, they went to zero. All right, so these are cryptos that are daily catches. Basically, if I see it, I hit my bottom and get in. Nice. Okay, yeah, do what you gotta do. Then set my stop loss. Yeah, you're doing it right. If you have your stop loss, you do what you gotta do. Then yes, it's the world's longest wedge has to get a pullback. Which one, big man? I like Tesla over crypto. Tesla, we'll put Tesla on this chart. I like to look at Tesla on this chart. It's holding up a little bit. Tesla over crypto. I mean, totally different industry, right? Crypto is, man, I'm gonna get hyped up talking about these innovations. I'm into innovation. You got energy storage, right? Which is, hey, Tesla's battery, mega cap battery technology, solar tile, solar tile, solar plates, whatever the hell you want to call them. What is the other one? That's their tiles and their solar, because I have a friend that's cleaning them. Anyways, that business could be bigger than the EV business. Okay, so Tesla's just getting started still. It's a long-term play. You can trade it as always. It's harder to trade. You're probably going to lose more money over time trading. But if you know what you're doing, if you like it, you do it, right? So I definitely like Tesla too. But it needs to hold this dang level. We need the overall market to start to support. Bitcoin, no one's bullish sub 30K. I think there's some bulls at 25K in Bitcoin, me personally. Yeah, like Chainlink, they spend a lot of their tokens though to expand business development and push price down for now. Did you talk about XDC yet? No, I didn't. What's XDC? XDC? Hey, if you guys don't mind, jump over to the Bluetooth link in the bio. Just subscribe real quick. Give me a subscription. I'm trying to grow my YouTube. This is where the charts are at too on the YouTube. So I appreciate you if you guys jump over. While I do the TA, you'll be able to see the technical analysis and just subscribe. Help me out. Give me a comment, whatever. Help me out with the algo. Appreciate it, guys. MSTR. Hey, I like MSTR right now. Mara, they finished. So MSTR. So XDC Canadian dollars. What the heck is XDC? I don't even know what this is. It no XDC USD. You're probably talking about a crypto, huh? Yeah. Okay, you're talking about a crypto. Oh, wow, this thing is booming. Okay, this thing is exploding. All right, this thing is exploding. I don't know what it is. It's up 197%. XDC USD. I don't know what it is. I have no clue what this is. Like, there's a billion cryptos, right? I don't know what the market cap is. It was at 3 cents. Now it's at 9 cents. So it pretty much tripled, had a nice bottoming pattern. I mean, the real entry for this would have been when it broke that downtrend, right? Like somewhere around here. But I don't know what the news is. It's really hard to track. A lot of people piling up there. All-time high, 19 cents. Hey, maybe it goes higher. I don't know. It's not my type of thing. I don't even know what this is, XDC, if it's real, but it is trending. So, okay, let's just do some TA really quick. You can't do moving averages on this crap. You just can't. It doesn't have enough history. But if it pulls back into the trend and holds XDC USD, maybe supporting 6 cents, 7 cents. I don't even know. There's too many variables, but you got to get lucky on these. There's not a whole lot of technical analysis you can do because they just start exploding higher. You just have to buy it and hold it and get lucky. I wouldn't do it. That's not my type of thing, but it happens, right? You just want to make sure the bull market is on before you really start getting long, because these things can dump 60% really quick. Okay. I'm going to do another daily recap today too, for CNBC. Oh, I was going to say too, there's a dude on Wall Street right now. Let me go back. Let me go to Bitcoin. There's a guy on Wall Street right now who is actually, and look at Bitcoin is just, oh, look at the Qs. Qs up, IWM up, SPYs up, advanced decline up. Bitcoin is forming a bullish wedge. Okay. Of course, I'm going to draw the bull wedge because I think it's always bullish, right? But Bitcoin's looking solid. You really want Bitcoin to move up before you guys get lucky on the altcoins. Because what if Bitcoin goes back down to 20K? Oh, this is what is this? This is Bitcoin's market cap? What the heck? I guess that's fair enough. So it used to be the size of Nvidia. This is kind of cool. So anyways, this is wedging. So if we get that breakout in Bitcoin, then above the 32K level, or I guess above the 600 billion market cap level, then maybe you're a little more reassured there. XDC is an adult crypto. Got to read a lot. Okay. Bitcoin in accumulation mode. I agree. I like MSTR though. Mara, I don't really like. My friend likes it. He loves Mara. He'd rather do Mara. Obviously, it's less expensive, but I do like MicroStrategy because of the short. People are so positioned short in MicroStrategy that the short squeeze alone could really squeeze an options play. But that's for the risky people. It's not a meme. XDC is not a meme. Spark got in early this morning, moving nice. Oh, SparX. Okay. Markets saying turn around. Yeah, the markets are moving around. SparX, not sure what that is. XDC, yeah, I don't even know what XDC is, but markets are starting to turn around here. Now let's look at the macros. I want to see, is the dollar coming down? Look how the market comes. The market is finding a bid. I mean, it's not like we're back in the, we're gonna wait for the earnings, but dollar's coming down. This is the easiest thing to look at, the US dollar. We need the US dollar to really crash. And why is this at 97? This should be at 101. All right, we need the US dollar to crash. But it's hard because money market funds are paying people 5% to park their cash. So people are like, hey, I don't know if there's a recession. I don't know if I could trust the stock market. Everybody says it's going to collapse. So I'm better safe off just yielding 5% in, dollars. So it's going to be tough to get the dollar down without a really good inflation report. 10-year yields, goodness sake, still moving higher. But this does shift the yield curve into a positive economic, into positive territory. Although it's not positive yet because 2 years are still yielding more. I'm going to bore everybody to death if I start talking about yields. But TLT getting crushed, that is a sad story. All those bond buyers accumulated from November. They've been accumulating bonds for a year. Look, this is sad. I'm sorry. I was thinking about getting long bonds. I just never did because I was like, I don't know. Good thing I didn't. But bonds are at the same point they were last October. So bonds are at the same area they were a year ago. That's sad, right? But the positive is, if you're in the market, is that is a signal that the economy is stronger than expected. So that's the positive. Hey, don't forget to jump over to the YouTube. Just click on it. Go subscribe to my YouTube, guys. Come on. And then you can review the video if you want. You probably don't care, but it'll help me out in the algorithm trying to get my YouTube up. Market's saying turn around, bright eyes. Every now and then I fall apart and I need you here right now. Appreciate it. I'm yielding 5% in brokerage account, ready to invest. I'm such margin cash along, waiting for rating to trade. I'm subscribed. Thanks, big man. Say what's up on the comments. It gives me a little boost. All right, so let's see. So yeah, those are US Treasuries. What else is going on? I think that's about it. I was gonna look at this article real quick on CNBC. Oppenheimer Asset Management was the latest to do, increasing their S&P target. Let me go to the S&P and then let's go intraday so we can see this action. 5 minute. Zone in here to the 5-minute chart. Actually, no, we're not going to do this. We're going to go to the other chart. This look, TOS just looks better, right? This just looks a lot better. Poor EMPH. I know it's down a lot, but you're getting a bounce here. See how strong this bounce is. Looks like it still has resistance at 450, but on the upside, it's moving up. IWM, SPY. See what the Dow looks like really quick. Dow. We're not out of the clear yet. QQQ is having a nice bounce off support though. Going to the intraday. This is what it's looking like for the Qs. Nice move off PDC. Okay, so rejected by previous day close, which is an important resistance level. Rejected, reclaimed it, moved higher. Good. Nice for the Qs. Nice for technology. Hood was on watch. Oh, what's up, Victor? Robin Hood. Appreciate the likes. Hey, Victor, go jump onto YouTube and follow me on YouTube. Subscribe so you can get the videos so you can learn about finance. All right. Oh yeah, the article. So this guy was talking about their increase. Oh yeah, they talked about, so Oppenheimer raises their basically stock market forecast to 4,900, and then Citi also raised their price target of 4,600, and I think we're going to see more raises for a lot of reasons. Financial services firm Sanders Morris Harrison is also more bullish. Chairman blah 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 Street Science. What did he do? He raised it to 5,000. Represents a potential upside for about 9%. From Tuesday, the index has already soared about 20% this year. Ball said the forecast is realistic, not frothy. So not frothy. 5,000 target for S&P. That's about a 9% increase from here. That would bring tech to new highs. I think all-time highs for everything. Tesla's definitely going to all-time highs. And I just listened to a guy who said Tesla to 800 this year. That's a little extreme. Anyways, how to position for 5,000. This was the interesting part. He does mention energy stocks because oil is going higher. So that might be a good hedge to get in, to be in energy. Okay. I don't like to say it because I don't want to see oil higher, but it is the truth, right? You can't just say, I hate oil, it can't go higher. If it goes higher, it goes higher. It is what it is. So whatever, energy stocks, who cares? He's also says a small position in Bitcoin is worth speculators at this point. A small position in Bitcoin. He also says hedge with the VIX. I don't like that though, because the VIX is a spiker. It doesn't just it's not an investment vehicle. It'd just be, I don't like that. Either way, he said that mid cap tech stocks. This is the interesting part. Ball said mid tech is the equity place for tomorrow. Big tech stocks have contributed to this, contributed too much of the gains this year, although the rally is broadening out, but otherwise established, but not gigantic. Tech stocks have more precise, blah, 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 whatever. They have more room to grow and are seeking profitability rather than revenue increases. I think he's talking about the mid-cap tech stocks. He named 3 examples. Telehealth company, Teladoc. Let's go. Right? If he's looking at it, a lot of people are looking at Teladoc. And then he said the trade desk, don't care. Some people probably know about I think it's TTD, double TD possibly. And then Mercado Libre, don't know what that is. All are down 70% or more from the high. And that's all I wanted to point out there, is that you got some Wall Street analysts looking at Teladoc and looking at Bitcoin, which is really good. The trade on United Healthcare. Oh, people are trading United Healthcare. Anything else good? Chips trade, cooling. Man, today's going to be big for Apple. Everybody's talking about Apple earnings. Does it sell off first? We might get a sell off. It feels like we're going to get a sell off because look at the Qs. The Qs running up so much might just be running up into this earnings report and then possibly sell off. But then we could still find a bottom. We know where the bottom's at least, right? For the Qs and the S&P. At least we know where the bottom's at. Hood on watch. Okay, cool. Oh, you know what? I have a meeting coming up in like 9 minutes. So Robinhood, what did Robinhood do? Just a reminder, I am going out of town this weekend, so I will not have a live report on Saturday, but I will have a report, a macro report I'll send out, just going over the data for this week. And I think a lot of that data is Wall Street is still negative. They're still extremely negative. And actually, the rate hikes are actually causing stimulus for cash, people who hold cash. It's stimulus, right? Disposable income is higher than inflation. This economy is going nowhere. Shorts are starting to squeeze. On the downside, September is the worst month historically. So maybe this is the last bounce that we're going to see over the next couple months. And this is an opportunity. I think it's a big opportunity still. We got that scare yesterday from the Fitch downgrading of American debt, but who cares because still the best debt in the world. Nobody else is holding other debt. Number two, the downgrade isn't as bad as it was in 2011 because in 2011, the downgrade meant you cannot back your capital with US Treasuries, but this time it doesn't matter. You can still use US Treasuries regardless of the downgrade. And the biggest risk, obviously, the TGA refill, but I think we're going to see yield curve control. I think we're going to get the Fed's balance sheet coming back into play while everybody thinks, money, what is it? Money is so negative. Not money, I'm sorry. Money growth is so negative that it's going to crush inflation and eventually, nice bounce on Hood. Oh, PayPal, you know what? PYPL. I don't know what happened to PayPal. That was nasty. That's why I say wait till after earnings. The technicals looked really good. Gigantic gap down on PayPal. What is SQ looking like? I want to see. Oh, affected them too. Who else do we have here? Who are the other? Not Visa. That's not one. PayPal, Hood, SQ. Who am I missing? I know I'm missing somebody. There's so many. Oh, that's who it is. SoFi. Did that affect SoFi? SoFi. Not really. A little bit. SoFi still pretty solid there. Solid looking. Open Doors. Take a look at Open Doors price action. It's chugging along there. CVNA. Is it deflating yet? Not yet. Dang. CVNA going for another squeeze. Insane. Absolutely insane. This thing was at $4 like 5 months ago. It was like $4 or 6 months ago, maybe. From Maui, Hawaii. Okay, what up? From Hawaii. Nice. I got to visit Hawaii. YouTube channel. Hey, thanks, Big Man's coming. Yeah, check out my YouTube channel. Help me out with the algorithm. Trying to grow the YouTube channel. I have all the charts on here also. And I'm trying to send out a daily recap video for just Wall Street, what they're saying. So check that out. Really trying to grow the YouTube, like I said. But you see on the flip side, yeah, I got a meeting. I do have a meeting coming up in about 5 minutes. So I will, I'll still be on tomorrow morning. Tomorrow's a big day. What do we got? Let's go over this before we take off here. So tomorrow, let's go through this quickly. We're gonna have the market digesting Apple earnings, Amazon earnings. That's gonna be big for the market. We also have Friday. ISM was pretty good. The unemployment rate, non-farm payrolls, average hourly earnings. So the biggest jobs report of the month is tomorrow. This is what the Fed is focused on. The Fed wants to see if the labor market is coming into balance, which means the unemployment rate. Well, actually, they don't really care about the unemployment rate. If it goes up, that puts less pressure on them to hike. But they want to see if the non-farm payrolls are spiking or staying even. The real labor market balance is going to be average hourly earnings month on month and year on year. We want those lower. We need average hourly earnings lower or just staying where they're at, because that is wage inflation. If they keep going up, they're going to hike, or that puts pressure on them to hike. We want the labor participation rate up. The more people that come into the labor market, the lower the wage prices, right? The lower the wages, because employers do not have to compete by raising wages to get you to come to work. But if people are coming into work, they're coming in, filling the jobs market, more supply. They don't have to hike prices. Prices come down. So we're going to keep our eye on that. I'll be on to report that tomorrow morning as usual. I tried to explain the freaking TGA refill, but it's so hard to explain that. I'll have to do just a day on its own because that thing is hard. It lose people. It's confusing, but I'll get better at that. Did I miss anything on the let me see, make sure I didn't miss anything here on the Twitter. Oh, follow me on Twitter too. I got the link in the bio. Follow me on Twitter. And yeah, other than that, I think that's it. Oh, you know what? There was some Bitcoin news. We'll go over it next time. Nothing big. Hong Kong officially opens crypto trading to retail investors. Look at China's coming. China is coming for crypto. They are trying to innovate. They are bringing capital. Hey, even if the US is slow, that fiscal stimulus that's going to come from China, their central banks and their central banks and their government stimulus, trust me, it's going to find its way into crypto some way or another. All right, I'm out of here. Appreciate you guys. You guys have a blessed day. Get your exercise, get your diet, get some good fats in your diet. I want to talk about this. I was thinking about it. Go for a walk today, or lift some weights. Lift some weights. Resistance training. Go for a walk. Get on the bike. Get some calories burned. Get your lift on. Right? Stay healthy as you can. Go for a swim. Hit the sauna if you got one. The sauna is always amazing. Sauna is really good for you. I love the sauna. It makes you feel good, helps you sleep better. When it comes nighttime, make things dark. Make your rooms dark so you can get a good, nice, deep sleep. Get some good nutrition. Get greens in your gut beforehand so you don't get sick in the future. Avocados are really good fat. Talk about food, huh? Eggs are really good for you. Anyways, stay healthy, stay blessed. I'll catch you guys later. Appreciate you. Appreciate the love. And yeah, you guys stay blessed, man. Stay blessed. We'll go over the market tomorrow. Thanks for joining. I will come out with the video later today. Thank you.